One of the most exciting things about crypto is how disruptive it is to the existing financial sector. And in this video, we're going to be answering one of the most important questions. What is decentralized finance? Because decentralized finance has the capability of being one of the most disruptive technologies in the financial sector. Let's get started. Defined simply, decentralized finance, or DeFi, is a financial technology that allows for the use of distributed ledgers and blockchains to provide users with financial services without the need of intermediaries such as banks or governments. Oh, and if you don't know what distributed ledgers or blockchains are, be sure to check out the playlist at the end of this video. By cutting out such intermediaries, users of decentralized finance can gain access to financial services like money lending, investing, and mortgages without the need of going to a bank, which basically allows them to get those services at a reduced cost. To truly understand decentralized finance, we're going to have to compare it to centralized finance, which is essentially the traditional banking system that we're all used to. In centralized finance, your money is held by banks, which are profit-generating institutions that are often publicly traded. And it's important to note that making profit is their primary goal, and they will literally do everything they can to make money off you and their clientele. This comes in the form of transaction fees, banking fees, credit cards, and even fees for just having an account with them in the first place. Perhaps the most hated of all banking fees, and kind of illustrative of why people want decentralized finance in the first place, are fees associated with insufficient funds and money bouncing because of insufficient funds, and overdraft fees. There's nothing like charging somebody extra fees because they didn't have enough money in the first place. And while the nickel and diming of the banking system is truly annoying, it also brings into question a very important concept, and that is, who are the beneficiaries of the banking system? Is it you or I? Is it the average Joe? It certainly doesn't feel like that, and I think that most people would argue that the beneficiaries, the true beneficiaries, are the CEOs and the corporate stakeholders and the governments that actually control these institutions. It doesn't feel like those of us that are being, nickeled and dimed and poked and prodded for every dollar we have are truly benefiting from the banking system. Okay, but hold on. We have to bring some balance to this conversation because realistically, there's a major issue worldwide with people not having access to financial systems and banks overall. So for us to be complaining about getting ripped off consistently by our banks, I mean, is it better than nothing? One could make that argument, but it's also why decentralized finance looks to be a genuinely disruptive technology that can benefit everyone across the world. You see, decentralized finance actually has two primary goals. The first is to reduce transaction times and transaction costs with regards to interacting with a banking system. The second is to actually provide banking services to anyone in the world that wants it. The unbanked can use decentralized finance in order to solidify their financial future for themselves and their families. Decentralized finance allows for people and businesses to transact directly without the need of any intermediary. They use blockchain networks that secure and protect distributed ledgers in order to facilitate those transactions. These networks charge a fraction of the fees of banks, and those fees are paid out to those who stake into or maintain that greater network, ensuring that the data is protected and transactions are verified. One of the components that makes decentralized finance or DeFi interesting for people like you and I is that we won't need governments or large institutions to control our money. We can control our own money, and we can be the stakeholders that benefit from this financial system. We could be the ones that stake our money into a system in order to ensure that the blockchain system functions, and we can then in return earn yielding rewards as a beneficiary. This system benefits us. It benefits the people that utilize the system in a decentralized fashion. Decentralized finance heavily relies on blockchain technologies, which we've discussed a lot in prior, and I'll actually link a video up above if you're interested in learning more. Regardless, decentralized finance needs these blockchains because the blockchains are decentralized. They have distributed ledgers across multiple nodes that create something called immutability, which basically ensures that the financial records or anything being done or transacted is done in a permanent fashion that can't be erased, deleted, or modified. It creates a system that is secure and safe for everyone. The transactions are permanent and they cannot be changed in favor of one party or another. It's also important to note that a new and an emerging DeFi technology known as smart contracts can also utilize the blockchain in order to facilitate transactions. Moreover, these smart contracts also benefit from the prior mentioned immutability and security of the blockchain, ensuring that they are never compromised and always executed as agreed upon by the parties engaged in the contract. So DeFi sounds great, but there are a few hurdles that it needs to overcome. First of all, because it's a disruptive technology, there are many major institutions, banks, and lobbyists that are pressuring policymakers to create strict regulation in order to stifle its growth. People at the top want to stay at the top, and they don't want the existing financial infrastructure to be changed to their detriment. Secondly, and here's the thing that a lot of people don't like to talk about with regards to crypto and DeFi, but a lot of people just don't trust it, honestly. There's been so many hacks, there's been so many problems and so many scams. People are just skeptical. They don't know if they want to trust something like decentralized finance or crypto with all the headlines about people being scammed here and there and hacks taking $600 million away and $1 billion lost overnight because a crypto coin crashed or the stable coin wasn't as stable as people thought it was. There's so much noise and people just want to feel secure often. And although you're being, literally ripped off nonstop by your bank, it feels safe. It feels normal. It's been what they've been doing all along. And so they're a little hesitant to change their ways because why would they change a system that works? Yes, it costs them money, but they feel secure. They feel insured. They feel like they can rely on the banking system. And make no mistake, when it comes to finances, that's a big deal. Ultimately, decentralized finance is an exciting and emerging technology that is capable of revolutionizing the banking system as we know it. And only time will tell if it reaches its full potential. Thank you so much for watching. And if you're interested in learning more, check out this playlist, which is basically like a video dictionary for all terms finance and crypto. Thanks for watching, and we'll see you in the next video.